Hey everybody, happy Sunday. Hope everybody's well. I'm going to make sure my audio is working. The camera is working, which is always good. And yes, boom. It was working. Yes, it does work. Awesome. So we are good to go. This is a big one today. 52 nuggets. I personally put 14 hours of work into this. And that doesn't include the time of others who also are behind the scenes. And I'm still shadow banned. But all I ask is if you learn something new, hit the like. That's all. And if there's nobody there that cares, then there's no point in me putting so much time into these things anymore. I'll just do it for my dear beloved Patreon community. And also, please hold on to the very end because we will be celebrating the women here in the community. Only 6% of my audience is female, but they're the best. And that's all that matters. So thank you all for being here. Let's jump in. Disclaimer, none of this is ever financial advice. It's only entertainment, edutainment. And a huge thank you to the community. It amazes me how much I learn and how much we share from everybody each and every day in Patreon. So thank you for that. First question comes from Jason L. Is it correct to make a direct comparison between crypto adoption and cell phone internet adoption when most crypto adopters are just speculators? Wanting to get rich off the tech is not the same as enriching one's life with the tech. Very good question. So let's dig into this. And of course, in any space, there'll always be speculators. But let's break it down one by one. First of all, you are absolutely correct. It is not correct to map crypto adoption to smartphone or internet adoption precisely because 99% of crypto tokens have no utility, value, and no use case. By the way, I will share the ranking from the crypto compendium of the top 500 cryptos. And that's a nugget that'll happen somewhere in about 30 slides. But wait for that because it'll really hammer home this point of where you need to play and where you don't. So we'll talk more about that. But in addition, most cryptos out there are junk, and their adoption is largely driven by speculation, retail investors pumping dog coins and all that stupidity. I don't get it, but people in the community here know better, so that's fine. Now, these crypto projects are designed really to dump on retail investors, and they have huge inflation rates and aggressive token unlocks that dilute their investors and allow insiders to cash out. That is why most crypto adoption cannot be compared to smartphone and internet adoption. So Jason, you are bang on. But there's more. So crypto must be transformative in order for us to map to smartphone and internet adoption. It has to be a game-changing crypto. It has to have some special sauce, some unique value proposition. And smartphones and the internet technologies that were received widespread adoption because they were transformative. And they provide utility, convenience, and brought value to consumers and business. This is what allowed them to become essential to our modern society. And of the over 20,000 cryptos out there, only a handful can be transformative. And we will show you where they rank in a couple of slides. But also, let's talk about the map. This is the adoption curve. And it looks at just Bitcoin's adoption, and it maps really well. Willy Woo put this together. Shout out to Willy. An analysis comparing Bitcoin adoption to the internet adoption and the adoption of other technologies such as PayPal. And in this chart, you can see that Bitcoin adoption is actually outpacing the internet, and it tracks well against PayPal's early stages. But the key takeaway here, ladies and gentlemen, is Bitcoin adoption is actually doing better than internet, and we are still in the early stages. And people forgot how sluggish internet adoption was. It took about 30 years before the number of internet users broke 120 million people. We are hopefully on target to hit 1 billion users on Bitcoin, hopefully by 2025, give or take a couple of years. Now, let's talk about the other key factor and why Bitcoin is so special. Bitcoin is the reason I started making videos 2 years ago, is to help people understand what it is and adopt it because I believe it can help so many. It already is. But Bitcoin is a transformative technology just like the internet, and it will cause disruption. So back in the day, those of you who are old enough to remember, the internet disrupted landline systems. You used to have to pay per minute to make a phone call anywhere in the world, even locally. And they used to absolutely charge you an arm and a leg. And the internet disrupted all traditional communication systems. And in traditional fiat system, you need the Fed to manage money supply, central banks to provide final settlement, retail banks and credit card companies to move money around for you because you're not capable yourself, and you need the military to maintain security through proof of war. Now, shout out to our other friend in that area. But Bitcoin handles all of that. It is a better monetary policy. It handles final settlement. Anybody can move money around at the flick of a switch. And the proof of work secures the system. And as more individuals and more businesses continue to use Bitcoin and its technology improves, Bitcoin's adoption will continue to rise. More and more people are beginning to really recognize it as a store of value. I was looking at some on-chain data last night, trying to figure out where we are going. The 10K plus whales are accumulating Bitcoin aggressively over the last week or so, despite all the fear and FUD. You know, were we teetering on the brink or are things okay? Well, somebody is accumulating big bags. So Jason, hope that helps you understand. We have a lot of Bitcoin questions today, so there's more. This is another brilliant one from Super Hornet. I saw a chart highlighting Bitcoin supply that was last active for 10 plus years is now greater than the total current Bitcoin balance on all exchanges. Millions of Bitcoin will never move due to being lost keys, etc. Does an intelligent method exist to use this chart to determine lost Bitcoin after multiple cycles? And can this chart be a de facto gauge for Bitcoin supply? Now, it can't, but I've done the work. In fact, since about 2017, I was obsessed with Bitcoin, and I used to basically document every time there were keys lost. And I've got this massive spreadsheet that has all of the documented cases with estimates of other data of coins, wallets, holders that are now gone. So let's look at the chart. I did show this chart in Okta about a week ago. And I said history has made Bitcoin dormant 10 years, larger than exchange, and more Bitcoin hasn't moved in 10 years than there is on exchanges. Now, the actual number, I calculated as well, Bitcoin dormant over 10 years, for 9 years, every single year. I've done all that. I'll share one with you. But let's talk about lost coins first. And these are some of the cases that I have tracked, and some are big. So I'm just going to give you a couple of cases just to give you an idea of how many Bitcoin were lost, and it is stunning. So case number one, Alex Jones. He is a controversial host of InfoWars and the Alex Jones Show, and he claims that he lost a laptop containing 10,000 Bitcoins. Well, his claim is correct because this story was confirmed by Max Kaiser, who gave him the laptop and the 10,000 Bitcoins. So, number one. Number two, lost coins. Bitcoin whale Mircea Popescu passes. He drowned, I think was in Costa Rica. May he rest in peace. And rumors had it he had a lot of Bitcoin. Some people actually expect him to have as much as 1 million Bitcoin. He was very early into the space, sold in exchange for Bitcoin. And apparently they sadly went down with him. Some people say 40,000 Bitcoin. Some people say a lot more. We don't know. But I'm just assuming the conservative 40,000 Bitcoin that he lost. These coins are most probably lost forever. And there's many, many more famous cases of this. One other one is number three. This fellow, James Howells, he threw away a hard drive during a clear out, forgetting about the Bitcoin on one of his hard drives in his computers. And now that Bitcoin is worth, well, whatever 8,000 Bitcoin is at the current rate, 8,000 times 25,000 approximately, 22,000, 23,000, whatever. It's a moving target. But he knows it's in a place called Newport Landfill. And he's been trying to raise money to find it, dig it up. And he said he will promise to give 10% of the proceeds to turn the city, his own city, into a crypto hub. So hopefully he finds it. Fingers crossed for James. But again, it's just a simple example. Now, let's dig into some of the data behind Bitcoin. This is going to take a very interesting journey for us all. Dormant coins. These are coins that have not moved in over 5 years. That's 6.14 million on top of the 3+ million that haven't moved in over 10 years. And we can assume many of them, literally a large percentage, will never move again. But let's dig into some more information regarding future supply, because people say, well, more Bitcoins be mined, etc. Let's just talk about how scarce this thing is. And I love scarcity. I hate inflation. 90% supply was hit on 14th of December, 2021. 95% of supply will be mined on March 31st, 2026. 99% of supply will be mined on March 17th, 2035. That is crazy. 99.9% of supply will be done by 2048. and 100% in the year 2140. So that is crazy. But the key thing here, the stat, just to show you how hard this thing is, the last Bitcoin will take 40 years to mine. And can you imagine what the price will be for the last 40 years? That'll be the year, what would it be? 2080 to 20, no, the year 2100 to 2140. Did I get that right? With so many numbers. Yeah, the last 40 years from the year 2100 to 2140 will only mine one single Bitcoin. So basically, it's going to go fast and it's going to become hard fast. And I hope it'll be around for a long time. Now, the other key piece of data is, according to Cane Island Research, I've shared this before, 4% of circulating Bitcoins are lost every single year. And, you know, that might seem unbelievable. I think that's going to go down gradually over time because as Bitcoin becomes more valuable, people really button up their OPSEC, their operational security. But almost every week, we are on the receiving end within Patreon of tragic stories of people who sent coins to the wrong place, who lost their hard drive, lost their seed phrase, hard drive broke, wallet failed, etc. Private keys gone, sending the wrong crypto to the wrong address. That happens so often, everybody. So really, really, really be careful. Now let's get back to your question regarding actual lost coins. And again, track this. The coins lost to date, by my calculations, is 3.921 million Bitcoin gone. Satoshi lockup is 1.04 million Bitcoin. Adding those two together, and I don't have all of the lost coins tracked, but I can point a finger to 3.9 million of them. The total lost and locked probably forever is 4.961 million. Mine to date, 19.3 million, and the coins available, 14.348. That's why I say with a huge amount of conviction that there'll never be more than 14 million Bitcoin available on the market, because so many are lost, so many are locked up forever. So I hope that helps you answer your question, but that's why it is the hardest asset. And it is most probably deflationary too. So this is one from Stephanie, obviously in Euroland. Hello, Team Europe. Given my cost basis is 1,431 euros for each ETH, and it is a HODL bag, and the current price is 1537 euros, would you consider placing a stop loss around 1360 euros? If yes, should I place a stop loss for 100% of my ETH bag? Then it could potentially revisit its lower logarithmic trend line. So let's dig in to a tool that we built not only to determine areas in which to layer out, but also when you look at it carefully, it also determines layers where you can set stop losses depending on the price. So we call this the layer out model. We just launched it recently. And again, this is part of the power. So I don't look at logarithmic regression, but this system has a whole bunch of stuff baked into it. So if you look at the current price, this is the current ETH price right now, 14, let me blow it up so I can see it. 1486, I think, 0.69 euros. This is not dollars, this is euros, ladies and gentlemen. Make sure you see that, so I added a little euro sign. So using the layer out model, you could technically set your first stop loss layer, number one, at 1413. I always like to go a little bit lower, like 1399. Make sure you don't get wicked out. Remember, that's one of the dangers of using stop losses in crypto. Your second layer, 1349, and your third layer, 1304 euros. And it doesn't matter, you know, what currency you're trading in. There are sometimes very small deviations between, say, dollar and euros for crypto, but these are very approximate layers. And what's interesting is you can see how historically, when you zoom out, how Ethereum has bounced off these layers, either as being support or resistance. So that's kind of not financial advice, but where I do it. Now, the other thing to this as well, I like to do things in threes. So what you can do is you can sell, say, a third of your bag or a portion of your bag at the first layer, and another, say, third at the second layer, and another third at the bottom layer. But remember, the key is, okay, when things wick down, imagine you get stopped out at 1413 and Ethereum wicks all the way down to 1304. Wait for the trend to change, then you layer back in. That's how you do it. So watch if there are new wash trading rules as well in your economy. Crypto in the US is not under wash trading regulation, so it's fine. But that's the magic sauce there for that model. Next, thank you, Stephanie, for the question. Next question, Susuhi. or Susuhai, would you pair trade your 20 crypto coins for Solana, Ether, or Bitcoin these days? They're all in the red and not sure what performance they will do if we go into a recession. I like old projects and I am okay to hold them till the next bull run. So remember, don't ever get married to any project just because you're in the red. That's no reason. Even if you're in the green, there's no reason to get married to it. Like I sold Matic a while ago. I'm very glad I did because it completely tanked after that. But if you look at this here, regarding the bull run, I believe there will be a bull run. I do believe a recession could impact spending. A recession could drive people to safer assets like non-crypto assets. But when recession hits, the Fed will do what's necessary to make it short-lived. So that's kind of my take. Also, I don't know what your 20 tokens are that you hold, but I want to show you this. This is the top 500 cryptos. We've just finished completely revamping the whole crypto compendium. It is better, more powerful, looks at far more data points than ever before. The numbers are kind of more or less the same, but some things have moved up and some things have moved down. So if you imagine the top 500 cryptos, this is what they look like. And this is where you can play. That is in the green area above the 6 score. So if a compendium score is 6 or above, I entertain it. If it's 6 or below, I don't. Okay. If it is 6 or below, it is a money grab. It has other bad facets I won't go into, but basically it's garbage. Now, if you break out these layers, so for example, there are only 5 tokens that score 8 and above. There are only 18 tokens that score 7 and above. And there are only 40 that are above 6. Okay? And that's from the top 500 cryptos. Green is where you play. Only work with good ones. Remember the very first question? Most crypto, 98 to 99% is complete garbage with no utility, or it's going to rot on the vine. You do not want to be holding it, okay? By the way, you can see on the crypto compendium here, the one in the top right corner with a score of nearly 10. You can all guess what that is. That's Bitcoin. So anyway, just want to share that with you. Again, I don't know what your 20 things you're holding, but I guarantee you, if you ran them through this, 18 of them would be under that red line and you don't want to hold them. So let's go to the next question. Old Marty, can you suggest a trading pair with Tesla, not Bitcoin, and include the ranges to swap in and out of each? Not financial advice. So I have covered, this is a great question, but it's also an extremely loaded question with way beyond the scope of this, but I will spend a lot of time on it to give you the tools you need to be able to identify pairs yourself and show you how they can be traded as well. Now, I will not do Tesla and other pairs because I've covered a lot of those already. Like I do look at Tesla MicroStrategy, for example, but I want to show you this. This is kind of positive and negative correlation map across a whole bunch of different stocks. You've got, I threw Bitcoin in there. You've got Alcoa, American Airlines, Apple, Best Buy, CVS, CVX, Home Depot, you name it. But the really beautiful thing is when it's green, it's a positive correlation. When it's red, it's a negative correlation. I like to focus on things that are kind of positively correlated because you know they'll eventually kind of go with each other in the same trend. Inversely correlated assets are much trickier to trade. So for example, here, if we look at this, obviously we've got Citibank and Bitcoin, very high correlation, interesting. Citibank and American Airlines, very high correlation, and therefore American Airlines and Bitcoin correlated. Alcoa, American Airlines, you've got that logo there is Sentinel-1 is correlated to Apple and Citibank is correlated to Alcoa. The negative correlations, and trust me, there's a method to this. You got CVS, Bitcoin, CVS, Citibank, etc. It's interesting we talk about Citibank and Chevron and Apple, not at all correlated. You know, jumping into CVS as a side note, big thank you to Sanjay for sharing this morning. This company is becoming a healthcare behemoth. 85% of Americans live within 5 miles of a CVS pharmacy, and the company is the most profitable retail pharmacy in the US. While Rite Aid has a net worth of, I think, $200 million, Walgreens has $30 billion, CVS is $105 billion of market cap, and they are dominating the space. And remember, there's a lot of money in drugs. So I don't trade CVS, but that's interesting as one of the pairs. So I'm going to dig into one of them and show you how you can do it yourself. here is a pair that are correlated. This is Citibank and American Airlines. I drew the little chart. You can see it's going back the last year or two. And I drew a little green line of when you flip Citibank into American Airlines and a red line across the top of when you flip American Airlines back into Citibank. And literally works like clockwork. You can do this up to 5 times a year, which is like the cadence that I like when I swing stuff. 6 to 12 weeks, a month and a half to 3 months is nice. So you can do it, quarterly basis. You don't have to keep your eyes on the market all the time. You can just check in every day, see how things are bouncing around these particular lines. Now, if we look at the actual price of the stocks, you can see I interlace them here. American Airlines is in yellow. Citibank is in that teal color, and of course the pair as well. And once you get used to looking at these pairs, this will be second nature. For somebody who's not used to them, they'll probably get seasick with all the different lines. But there you can see the relative activity of when certain things spike. So for example, in the middle of the chart here, you see the yellow spiking. That's American Airlines shooting, went all the way down early 2022 and shot up by summer 2022. Typically, airlines but they're seasonal. So summertime, a lot of people travel and people get excited about potential earnings for airlines. So you can see those types of spikes. So you can actually map this out over 10 years and you can see the seasonal spikes happening. There's one a year ago back here. The other big yellow spike at the top, again, summertime. So that's one way to play it. In addition, you can go to co-integrated pairs. So 2 assets are co-integrated, means they are fundamentally connected and that their price will eventually converge, and this provides a stable relationship for the pair trader to exploit, like us. Now, even when the prices of the individual assets may be fluctuating in the short term, in contrast, correlated or uncorrelated assets may not have that stable relationship, making it sometimes more difficult to predict their future and the success of the pair trading strategy. But I do like this. Now, there's a couple here. I'll just draw up one and why. Sometimes co-integrated assets aren't as easy to pair trade as something like the one I showed previously. This is USBanccorp against USBanccorp. And you can see here, this is the pair. And it's hard to determine, when to swap in, when to swap out. And they're not as range bound over a short term like the others. Now, to keep it simple, as we do, what we do is with the Arb Cloud model, it's basically looking at trading Bitcoin against MicroStrategy, when to do it, when not to do it. And this chart tells you exactly if you are below the cloud, you sell your Bitcoin for MicroStrategy. If you're above the cloud, you sell your MicroStrategy for Bitcoin. And you can do that like clockwork, even on a daily basis. So that's another way to do it. That's the way we kind of keep it simple. So you don't have to kind of understand seasonal patterns or co-integrated stuff. But this is the most co-integrated thing you can possibly find. Anyway, next question from Pacifica. What is your analysis of predictions of Bitcoin price before and after this 2024 Bitcoin halving, given the different macroeconomic circumstances compared to previous halvings? So this kind of is a great question because it ties into what we discussed earlier, the hardness, the scarcity. There's a couple of things that will be different this time around. One is the halving. Obviously, the impact of the halving gets less and less over time, but also the scarcity of Bitcoin goes up. And at the same time, the adoption of the Bitcoin network goes up. That is the wild card. What that will all mean, we're not sure. But again, getting back to our layer out model, these are my pre-halving targets per the layer out model. The high end of the range would be about 38,900, so call it 39,000. Mid-range about 36K, and the low end about 31,000. That's where I believe somewhere in that range we'll head up, probably in the mid 36K range. And the reason for that is this is exactly where the early January support was at 36K. So it's no coincidence it's there. But again, most important, and this next chart is probably the most important chart you need to look at, okay, to give you a true picture of where you are, not from a chart, but from a halving perspective. And this is an amazing piece of work from the Rational Root. And dear Rational Root, sorry I messed up your graphic. I added some things to make it clear to the viewers of exactly where we are. So first of all, on the bottom right corner, I added tops in a green box. This is when Bitcoin hits an all-time high and when that happens in relation to the halving cycles. Okay, number one. So that's typically, if you imagine a clock, that'll be at 4:30 in the afternoon. Remember, the halvings are at 12 noon at the very top and at 7:30 in the evening is the bottoms. All the bottoms hit at 7:30 p.m. And that's also correlated to the halving cycle. The question is, where are we now? Well, I added a little green triangle saying you are here. We are past, with the exception of the very first cycle, where the bottom is. But if you start from the very beginning out, we are most probably way, way, way beyond the bottom. So the bottom has been in for quite some time, if history repeats. But the beauty of this is, you know, the spiral. The more we get closer to the halving, the more price goes up. After the halving, the price goes up and accelerates till 4:30. Remember those numbers, 4:30 p.m. That's when the all-time highs typically hit. And 7:30 p.m., that's when the bottoms typically hit. So turning this into a clock, so you'll all remember. And we'll track this, of course, carefully as we go on. So hope that helps. So it'll be interesting when we come back to these. If this is right, 36K is where my money is at for Bitcoin, April 2024. And the internet doesn't lie. So we'll come back, and I won't forget to bring this up again. Who knows? Maybe it's 25K in April 2024. Could be 50K. We don't know. But going by the adoption and looking at some of the on-chain data, this time could be very interesting. Next question from Scranny Wanch. What is the best risk-reward play for Bitcoin miners right now without using margin and up to a 2-year time horizon? So you may have missed my February crypto miner, Bitcoin miner update. I do them every month, and I'm going to be putting together a calendar for you all so you can know exactly what happens on Tuesdays, what happens on Sundays, what happens on Saturdays, etc. Fridays, typically interview days. Tomorrow is Monday. That's DCA. We're going to be on Rand's channel tomorrow as well. But let's go back into this and let's look at some of the key metrics that I use. And they are absolutely critical. I love ratios. I love metrics because that gives you a clear picture of exactly where certain assets stand compared against other assets. This chart shows you how Argo, Bitfarms, CleanSpark, Hive, Hut, Iris Energy, Marathon, Riot all stack up. You can see here CleanSpark wins on what I call my blue, which is the market cap divided by Exahash. And it's also in red is the Bitcoin mined per month in January 2023. So not only are they extremely capital efficient in the amount of market cap they have per exahash that they generate, which is one thing I look at, because you got to if you're investing $1 in a share, you want them to make that dollar work as hard as possible. That's what they do here. In addition, another view of this is the market cap per exahash kind of dialed in, and you can see how they compare. Hut completely exploded out of this, and therefore things are changing at Hut, which you talked about before. In addition, if we look at this is the I Invest Answers Bitcoin return on investment divided by market cap per month. This is the amount of ROI that they have generated for the Bitcoin that they mine. And CleanSpark smashes everybody with about 6.12% return on their Bitcoin mined per month based on market cap. That is a huge return on investment. Very, very big. Nobody even comes close to them. In addition, I have my final composite score, which looks at a whole bunch of stuff, how much they HODL, last 12 months performance, their balance sheet strength, dilution, ratios, etc. You'll see here that there are key factors like dilution for CleanSpark is yellow, not red, yellow, but yellow is not good. You want green. Marathon actually has the least amount of dilution and all the other ratios. But the composite score, again, for all of these, across all of these, CleanSpark wins. So that is the winner. But beware of one key thing, ladies and gentlemen. This is dilution. This is CleanSpark dilution since early 2020. They were down around 20 million shares. Now they're 78 million shares. This is heavy inflation. Now, granted, starting, they were flat all 2022 up until July 2022. And they started issuing stock to buy rigs. And what they've done very cleverly is they were able to buy rigs at a discount because miners are going out of business. So perfect timing. And I have Zach, the CEO of CleanSpark, coming on the show real soon. And we're going to dig into everything. And he's a former CPA. He's an accountant. So he will know his numbers. And we will test him on his numbers. And again, thank you all in the community as well for helping me address your concerns regarding CleanSpark too. Next question is from Crypto Flash, and I'm going through this in a flash. With EVs being a reality at this point and adoption worldwide is it a smart play to look into lithium stocks such as Albemarle? Crypto Flash. Well, I did. I analyzed all of the top lithium stocks, and many of them have very, very shaky books. So I get concerned when certain ratios don't add up or when certain things look like they're hiding the ball. So EVs, let's talk about, before we jump into why EVs are big, and this is something that we should all know, and I've stressed this, and this came out at Investor Day, and Sanjay shared it with me as well, but the total cost of ownership, despite everything is us, and people say, oh, but when they mine, they cause a lot of carbon dioxide emissions, etc. No, they don't. Watch this. Well, they do, but not as bad as other gas-powered cars. So EVs are far cleaner per this chart. And it also includes the carbon dioxide caused from mining for the batteries in the vehicles. It's the first chart like this that I've seen. And a typical passenger vehicle like a Toyota Camry emits about 68 tons of CO2 in its lifetime. 68 tons. Okay. And you've all heard me talk about the story of somebody who left the car running, baby in the back seat, strapped in, garage door closed. They forgot their cell phone. They went inside, and then the cell phone rang. Those types of things could end in disaster. If you ever want to know, well, I shouldn't say, but if you've ever been in a confined space where engines have been running, you get an idea for how poisonous carbon monoxide is. Anyway, 68 tons in a lifetime from a Camry compared to a Model 3 Tesla, which is 15 tons. Less than a quarter, ladies and gentlemen. And that is the difference. And that 15 tons includes the CO2 emitted when mining the materials that go into the making of the cars, both cars. Okay, so back to your question regarding lithium, and I'm like a broken record now. I'll say pure form always. I got to find out a better way of saying that. But if you look at the performance in this whole lithium revolution of this stock, you will see that Albemarle Corporation is up 280% over the last 2 or 3 years. Tesla's up nearly over 1,100%, which is, again, 3.5 times since 2020. So the point is, yes, you can buy components of the car, but you're going to make a lot more money owning the pure form, not something way down the food chain. And that's always the way in telco and every other type of business. Go for the pure form. Always. It will outperform over time, guaranteed. Especially after Investor Day, the huge takeaway for me is how Tesla control everything. They build everything. There are no or very few suppliers anymore. They do everything in-house themselves. And that means they have more margin for themselves. And that means they will destroy all other ICE manufacturers over the next 8 years. No ifs, ands, or buts. And I've never been more confident than that. So off my soapbox. Next question from Harley 369. By the way, on the soapbox, I got criticized yesterday for making somebody said, you got to stop making Tesla videos. It's like you're shilling Tesla. It's like, no, the channel is about guiding people so they can become financially free. That's it. Anyway, funny. Harley 369. Is it possible to pay off my mortgage in a year? £200,000 is the target. Could you offer solutions? I've earned an extra £10,000 this year from freelance, so I'm building the nest egg. And I've contemplated purchasing your II top and bottom. Oh, that's good. Well, we just talked about that today. So first of all, very, 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 very important. And, I've done lots of real estate videos and the importance of having debt and not paying it off, but having it locked in at low interest rates. And all of those who followed me in 2021 were able to refinance at 3% or less. I did 3 massive 7-digit refis in late 2021. Big thank you to my bank for doing that as well. But this is a key part. And I'm going to break this down into what I think we all should know. With my personal take, not financial advice. Ultimately, it's your personal decision. But literally, I do advise against paying off a mortgage because interest rates are generally lower than other types of debt, such as credit card or personal loan debt. And if you pay off a mortgage early, you may miss out on other opportunities to invest that money in a higher return investment, such as the stock market or retirement account. Give an example. So, what was it? 2019, I bought a ton of Tesla call options, leaps, and I could have used that cash to pay down my mortgage. My mortgage is a very low rate, like 3% or 3.5%. And imagine you save a couple of piddly dollars a month by paying down your mortgage, but putting that same money into a leap option for Tesla exploded. Okay, the return on those options was ridiculous, but it's just one example of how sometimes it's important to be in the market, invest money in higher return investments, such as stock market or crypto or whatever. Now, another reason it's good to not pay off a mortgage is there can be tax advantages. A mortgage interest is tax deductible in many places. I'm not sure about your jurisdiction, which means individuals who pay mortgage interest can deduct the interest payments from their taxable income, potentially reducing their tax liability. And by paying off a mortgage early, you may lose out on this tax benefit. So that's kind of key. But the most important thing about having money at a low financing rate is this. And welcome, Saifedean Amoos. He talks about this, the cost of fiat. So annually, fiat experiences a dilution of 14% globally. Global money supply, 100 trillion. Double wealth, 400 trillion. Quarter of all wealth is in fiat, and it's melting away. Every year, humanity loses 3.5% of global wealth, and that's 14 trillion, which is about $2,000 per person lost to finance government parasites, wars, monopoly banksters, etc. That is why you want somebody else to hold your melting ice cube, not you. Your real estate will go up. The amount that you owe will shrink over time in purchasing power. That is the key lesson here for everybody to take away. And finally, the favorite part of the week, the chicks of crypto. Again, as I mentioned, my channel is only 6% female, but we have the best women, and many of them are here on the chat. We've got Tracy. Thank you, Tracy, for all you do every single day. We've got Kat. These are, by the way, New Zealand penguin rescues and baby penguin chicks. And they've all been named in honor of the great women of crypto here. We've got Margie, we've got Min, we've got Frankie, Kristen, we've got Catherine and Emily, and we have Marina. All wonderful people. Thank you all for being here and being part of it. And now you have a little penguin chick on the other side of the planet, unless you are in New Zealand. I don't know where most people are. I know a lot of them are in the US, but that is so great. And thank you again for everything. Hope you enjoy the KPM. Hit the like if you learned anything new. I guarantee you learned a lot. So let's jump into some live questions. And again, thank you very much for being here. Let me see. Cat with a K. There you are. Thanks, James, for being here and the community and appreciating your female say yes. And we appreciate your hard work, time, and effort. You rock. Womble Stacker, I saw you there. What happens if Voyager has to sell off its ETH, Bitcoin, etc.? Will it dump more? There's a lot of headwinds now for crypto. And I was very concerned yesterday. And I was looking at everything I could possibly get my hands on. I was like, where are things going to go? We got the Shanghai unlock. I covered a lot of this actually in the video. I think it was on Friday. It was on Friday's video. But, you know, I've done a lot of modeling around what would happen if, say, 5% of the supply was dumped, etc. It's not all going to happen on the same day. It'll be dragged out over time. A lot of people will also want to acquire that through an OTC transaction. We have now Mt. Gox spheres as well for Bitcoin. There's a lot of stuff that is just weird. But what gave me confidence when I looked at those whales that own between 10,000 and 100,000 Bitcoin, over the last 2 weeks, they've grown quite a bit. So these whales are stacking despite the headwinds. And we're seeing that as well with the actual price action of Bitcoin today. Like, it is just holding tough at 22.4. After that big dip, there was a 25-hour period where Bitcoin was literally flat. I thought it was dead. But from that perspective, I thought, well, should we just sell everything and hope things fall down and then buy them back cheaper, or hold or hedge or whatever? I'm not sure. The price of insurance is very high. Definitely things could dump more, but when I look at the on-chain data, it's as people accumulating, and that gives me confidence that these people kind of know what they're doing, unless they're going to buy a ton and then dump it all in line with others dumping. We don't know, but I think there will be a little bit of bounciness. I look forward to getting March behind us, but so far it's holding up real well. So I don't have a crystal ball, but some of the short-term stuff I'm looking at is not that tragic, despite all the fear you hear out there. Nabil Khan, sometime in the far future, what if all the Bitcoins are lost? Nabil, great question. I've actually modeled that out to 2050 of how many could eventually be there at the current rate of loss of Bitcoin. And it'll take us down to about 6 million Bitcoin. There'll never be a time when all are lost. That's the calculation I did do on that one. So I do like the way you think. But 2050, worst case will be about 6.4 million Bitcoin will be left. If the rate of, people losing their coins, etc., shipping in the wrong place continues, I don't think they will. And just imagine how hard it'll be if there's only 6 million left. But as Bitcoin becomes more valuable, people are taking much more care. Jay Day, here's a good Bitcoin question for you. How can something made by man be scarce? It's code, it's math. Yes, everything is kind of made by man, but it's the code that makes it scarce. And yes, anybody could fork Bitcoin and create another version. You see scam ones out there like BSV and BCH, etc. That's an example of what they are, but they don't perform the same. They don't have the same adoption or value as Bitcoin. So from that perspective, good question, JD. But yes, it's the math that makes it scarce. Della Redaja, where can we view the crypto compendium? Patreon group. So what we've done a big rework of it, added a lot more parameters, and it is a monster database that is not viewable. If back in the early days when I started this, I shared this and other things, people stole them and used them as their own to create their own content. So what we do within Patreon is, if people have a question regarding a certain asset, I answer it. And that's how we use it. We use it to guide the community away from scam coins, or if they have a choice of, should I buy, should I hold, should I trade, should I swap, which will do better over time, because we've also correlated, actually over the last 2 years, crypto compendium scores to overall token performance, and it does really, really well. It explains like 93% of the performance, which is stunning as well. But we do not make that database available. That's our secret sauce here for the community. Next, Crypto Ninja. Does anyone else feel like the recent FUD has been a huge fake out? Like the bull is inevitable, and these are just the pre-run jitters. God, you guys are on fire today. I mean, you are asking all the questions that I think about. The last 24 to 48 hours, I've been thinking about reading all the FUD and everything else, and then spending a lot of time on chain looking at who is accumulating and who is spreading FUD. Now, I know there's a lot of people that want the Bitcoin price to come down because they didn't get on the train yet and they're eating their hearts out literally. But when I look at the 10K plus holders stacking over the last 2 weeks, heavily, last 10 days especially, that gives me pause, which makes me think, yeah, maybe a big fake out. Also, if you saw my Friday's video, you'll see it's a coordinated attack. Everything is confluent at the same time. Everything. And that makes me suspicious. So somebody's trying to rattle our boots, and who knows? There are so many headwinds all hitting at the same time. Regulatory scrutiny, the Shanghai hard fork or upgrade, the Mt. Gox dumpage. And again, Mt. Gox holders have been holding for 9 years and they're very early adopters of Bitcoin. They're just going to be happy to have their Bitcoin. They're not going to sell it, especially everybody. Remember, let's go back to this little chart here. If I can find it, where's my rational root chart, which is a thing of beauty. This puppy. This is all we need to think about. Okay, where we are in the cycle. We're going up from here, ladies and gentlemen, not down. And those that had Bitcoin 9 years ago, they know this very well. So I don't see that happening. Same thing with Ethereum. It's early in the run. 60 to 80% of those holding staked Ethereum are underwater. They're not going to dump it at a loss. So that's just my take. So Crypto Ninja, great questions, everybody. I love this because I learn as well. Thank you, Mike. Love you too, man. Take a bow. You too. Bill Whammers. Talk about Tesla as much as you like. The haters here can F off right here. Yes, exactly. So a lot of people say, just focus on crypto, focus on whatever. I focus on where the money is. If I thought gold was going to go up, I'd be talking about gold all the time. If I thought lithium was going to go up, I'd be talking about lithium or natural gas or whatever else. I will follow where I believe the alpha is. And for me, you know my asymmetric bets for the next 8 years. Anderson W., thoughts on Wyckoff? Human emotions investing? Yes. In fact, one of the reasons I got shadow banned from YouTube, one of the 2 reasons I mentioned once for young people, and I'm speaking in code here, hope you guys can understand. The second time was I mapped adoption to a Wyckoff formation. So one of those things got me dinged. So thank you all for the likes as well. But yeah, I think humans believe in many things. Like TA is extremely important. I use it all the time. I would be naked without TA, but there comes a time when maybe people trade based on what a chart tells them. Maybe that's part of it. Now, I do believe back in the day, yes, markets were much easier to manipulate, but now today the markets are very different. Remember, huge amount of activity is done by algos and bots that also use TA to trade. And then that drives momentum, and then people jump on momentum. That's the thing. So is it all a self-fulfilling prophecy? Yes, I think so. Human emotions, humans following patterns. Big time. Bill Wammers, will you offer to go on Dan O'Dowd's obstacle course in your Model X? Cybertruck, yes. Model X, I don't know what his obstacle course is, but I'll definitely check that out. Pie Guy, do you prefer creamy or chunky peanut butter? I have never tasted peanut butter. I don't do dairy, so I don't like butter. And I always thought as a child peanut butter was made of butter, so I never touched it. And I like nuts, but I don't like peanuts and the reason for this is more kind of scientific. Peanuts are designed to absorb a lot of toxins and they keep them, and that's why they trigger a lot of allergies in humans. So I avoid peanuts. I hope that doesn't bring down the price of peanuts out there in the marketplace. So never touch peanut butter, and I have a pretty strict diet as well. Thank you all for your super stickers. I love being here. Pancake Panda, KN, AC1, a bottle of red, St. Jude needs this, Mike. Love you guys, all the regulars. Thank you all. And we got 1,640 people and nearly 1,000 likes. So appreciate you, each and every one of you. I think that's it on the questions. And yes, be well, everybody. I'll see you all tomorrow. DCA is earlier tomorrow. We're rotating CTO. Myself and Ran will be on CTO's channel tomorrow. And we'll be, I think, let me get this time right, 7:15 or 6:15 a.m. Pacific. I'm not sure, but I will tweet it. So follow me on Twitter, and I'll let you guys know on Patreon as well of all the plans. So thank you, everybody. Love you all. Happy weekend. Go out there and get some vitamin D. See you.